What's going on, good people? Welcome back to episode number 3 of the journey to get funded. Today is September 26, 2023. We made some trades today, so let's get into it. So yesterday's closing price is 34,277, but that wouldn't play too much of a factor at all today. We passed that level in the pre-market and we pretty much never look back. So let's go ahead and start our analysis at 9:30 this morning when the market opened. So when we opened, we initially came off of a low that we made during the pre-market hours, popped all the way back up to an ultimate high of 34,139. Now from that point, we created a lower high right here on this green candle. Now once I saw that lower high, I saw prices break back down below what used to be a previous higher low. So then that confirmed to me that the selling was dominant at that time in the market. So I started to look for my short trade entries. Now I saw prices come back to retest what used to be the previous low, and then that's where I shorted right here at trade number 1. Now right here I was just a little bit too early, and sometimes when you're trading and you're trying to short from that lowest level of resistance, you can see prices actually come back to retest one of the highest prices of that swing, and then they'll actually get rejected. So if you happen to get caught up in that short trade and you get stopped out on the way all the way back up, if you ever see prices come back down back through your original entry price, you get back in and you take that same trade as long as everything still lines up. So as long as that push to the upside created another lower high, you're still good to take that next short trade if you want to. So that's pretty much the idea I had behind trade 2. So I took the same trade as number 1 when prices came back and they were on their way back down. So once I saw that, I just wanted to take it all the way back down to retest the previous higher low that got established at around 9:40 this morning, probably about 10 minutes earlier. So after trade 2, we see prices spike up. They kind of consolidated within this zone for a minute. We had, I believe, consumer confidence come out at 10 o'clock, and that's what caused this little reaction all the way back up to the top of what used to be support but is now acting as resistance. Now this level is important because if you also notice, if you follow it across, it lines up with what used to be a previous support level for this higher low right here where this ellipse is located. So that right there just confirms that the selling is strong in the market, because the buyers had multiple opportunities to push the market higher, but they got rejected every time they tried to do so. Even when they had a large momentum move back to the upside, they still got rejected. So that tells you that it's a lot more supply and a lot more selling in the market than it is buying. So after we touch the top of this level, we see prices spike all the way back down to what used to be the low for the day down here at the blue line at 34,040. And this was actually a level that was taken from some prices in the pre-market. Let's see how far back that goes. Yeah, this goes all the way back to 3 o'clock this morning when the London session first opened. We created a double bottom back then, and then that level never got tested until the New York session opened, and then we eventually came back to retest that level. So once we hit that level, we bounced back, and you can see that the buyers never really left the market. They were still there. I guess they were just waiting for better prices, and you can tell that the buyers were in the market mainly because of the volume and the size of the candle that got created right here. So if we scroll down, we can see that the volume was extremely high. And if you actually compare the volume, this volume candle was the second highest volume candle that got printed since the market opened. So whatever the second highest volume candle is in comparison to the open, because more than likely the opening candle at 9:30 is probably, it's like a 95% chance that's going to be the highest candle for the entire day. But the second candle that comes after that is very important. And I don't really consider the second candle anything that comes within the first 5 to 7 minutes, because that's more so just a follow through motion from the momentum that came in at the open. So any candle that comes close to the opening volume after the first 10 minutes is very significant. And that's what we saw right here on this candle. And that eventually pushed us back up to retest the level that we were actually trending in when we were in this zone a little bit earlier before. Which makes sense. That's something that you see a lot of times in the market when it comes to price action. You'll be trading within a zone. You'll have a false breakout to one side that actually leads to a breakout to the other side. And then you come back to retest that second breakout. And that's exactly what we saw right here. Now, what's interesting is that the buyers had so much momentum on this one candle and had enough momentum to push prices back up to 34,081 at the bottom of this zone but they got rejected as soon as they got back up there. So that means that for all of the momentum that the buyers had, the sellers were still able to step in and say, all right, that's enough. We send the prices back down the other way. So that tells you right there that even though the buyers were strong, the sellers were even stronger. So that gives you a pretty good idea about why we see this strong move to the downside after that move to the upside, where the buyers pretty much exhausted everything they had and got rejected. And then we saw a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, a 14 candle spike to the downside. So anytime you see a move like this, more than likely you won't get any real visual pullbacks where you actually have a clearly defined swing low and a swing high. And that's one of the main characteristics of a downward spike or upward spike, but it's a downward spike today, so we'll talk about that. So in order to look for a pullback, what you do is try and find candles that make a big difference. Now, I use the concept of the fair value gap. So a fair value gap can be created when you have a gap between candles where the candles don't intersect. So notice how if you look at this candle right here, this one and this one, they all intersect in some way, shape, or form. The high, let's see, hold on. So the high for this candle was 34,053. The low for this candle was 34,052. So those candles touched. But notice how once we had this big sell-off, this push down after we broke through support, we never really had these candles come back and test each other. So if you notice, this candle never got tested by this one. So from my understanding, you can draw a fair value gap in between those 2 points and look to use that as a reference point and a zone going forward in the future to make your trades from. So that's pretty much the strategy that I chose to use today. So once I drew the fair value gap right there, we see prices continue all the way down, and they pretty much ran through all of the major price levels. So they ran through 34,000, they ran through 33,975. So once they broke through 75 and they kept going, and I saw that the bear spike was continuing to move to the downside, I just said, okay, in my opinion, the next most important level would be the 50 level. So I'm aiming for 950. And if you were to follow prices across, we actually had no price levels in between here, and you could pretty much go back as far as you wanted to. I went back as far as, I think I went back 4 or 5 days, and prices had never been down here. So I'm like, okay, it's no really previous levels of prices that you can use to actually determine where you want to take prices or where you want to exit at. So that's when I start to use those quarter levels. So those 50s, those 75s, those evens, those double zeros. So I was pretty much aiming for prices to come back down and test the 50 level right here on trade number 3. But they came all the way back down to a low of 53, didn't quite hit 50. And then they came back up to my original entry, and I closed the trade out right there for break even. So, you know, no hurt, no gain. Not bad. You know, I feel like that was a good trade. It made sense, and I think I did a good job of just being disciplined, because I think in the past I would have maybe held on to that trade like, nah, the sellers are strong right now, so they got to push it back down again. But today I just took what the market gave me and I made the right decision, so I'm proud about that. Now, what's really interesting to me is that we see prices come all the way back to retest the fair value gap. Now, this is just so interesting to me because this is actually the first time I ever used a fair value gap when I traded in a live session. You know, I've always heard about fair value gaps. I watch other people's videos on YouTube who use fair value gaps fairly well, but I just never got into it because I just felt like it wasn't for me. But I studied it this weekend, and then lo and behold, I come here on Tuesday and I get an exact scenario where a fair value gap could be used. So I drew the gap, but I was like, I don't know how well it'll actually hold up. But then when I saw prices come back, retest the bottom of the gap perfectly, and then sell off, I'm like, very interesting. I like that. I like what I see. So after we sold off, we created this higher low right here and pushed all the way back up to the top of the zone. Now, this is where everything pretty much clicked for me, because I was like, okay, we had one test and that worked. But then when I saw a second test of the fair value gap and it got rejected perfectly, I'm like, oh, okay, now I see why people love fair value gaps so much. So then off of that, I was like, okay, fair value gap is pretty much a zone. I have a good strategy for using zones, so let me go ahead and employ that. And that's pretty much what I look to do on trade 4. So on trade 4, I went long at the bottom of the fair value gap and then just took it back up to the top. I didn't want to be too greedy. I thought about taking it all the way back up to 34,037, but I just felt like it was a little bit too early for that, and maybe I would be jumping a little bit too far in front of the market trying to do it that way. So I just said, look, if I got in at the bottom of the zone, let me just take it back up to the top. So I went long here, sold it here, called it a day, and was like, look, that's my trade. I took it. And after that, we see prices come back down, retest the higher low, which shows you that bulls are definitely in control right here, right now, because anytime you have a higher low, that shows you that the bulls had enough strength to stop whatever selling was occurring at that time and reverse prices and push them back to the upside. So if they ever come back to a previous level that used to be a higher low and you still see support down there and you still see demand down there, that tells you that the buyers are still strong in the market, and that more than likely it's a high probability. It's not guaranteed, but it's definitely a high probability that prices could move up in the near future. And that's pretty much what we saw once prices bounced off of this support level and finally moved back up to the lows of the fair value gap. So once we got back up to the FVG, we created another higher low right here. And anytime you see a higher low below any zone, whether it's a normal zone or a fair value gap zone, a higher low below that zone increases the probabilities of prices coming back up to retest the top of the zone. So right here, I thought about going long, and I placed my order down here towards 94 because I'm like, look, when I use the higher low strategy, I like to go long at the support level of the higher low. Now, it was tempting to go long right here at the bottom of the zone because I'm like, hey, it's a fair value gap. More than likely, that's where prices could potentially reverse. And I already had a positive trade from there at 4. So more than likely, it should work again since we're in the same market scenario. But I was like, you know what? I'm going to play it conservative. And prices actually ended up coming back to the bottom of the zone and then pushing all the way back up to retest resistance up here at 34,040. So even though I missed out on that one, I still feel like I made the right decision. And sometimes, well, not sometimes, but a lot of times when you trade, it comes down not all the time to the trades that you take, but sometimes it's the trades that you don't take. Now, in this scenario, did I catch the good trade? No, but I'm happy because I had enough discipline to stick to what I know. And basically that goes back to the mindset of taking your setups and letting everything else go, no matter how appealing that it may seem. You got to fight those urges to take any trade outside of your trading plan. So I think I did a good job right there of just staying disciplined no matter what the circumstances were. So after we hit resistance, we sold all the way back down to the fair value gap. So once we pushed through, I just expected for prices to come back, retest the top of the zone, and then I just wanted to take them back down to the bottom of the zone. And that's pretty much what I did on trades 5 and 6. But the only thing I would say is that I left a couple of points on the table. And I think on this first trade, when I went short, I had an opportunity to get out at the lows of the zone, but I decided not to because I was holding out for this higher low. I expected for prices to come back and retest that level, and then I wanted to see if the buyers were still strong, but I felt like prices could definitely come down to that level. And it doesn't seem like I left a lot on the table because it seems so small, but the low for the zone was 99. This trade got closed at 34,004. So that's 5 points that were left on the table that could have been picked up. And then I came back and was like, look, if we're in the zone, more than likely we're probably going to continue down to the higher low. So let me short it right here. I'll put my stop at the same place I took my original trade. So pretty much it's a risk-free trade. And then I want to see if I can hold it back down to that higher low. And the same thing happened on trade 6 that happened on trade 5, where I left points on the table that should have been picked up. Now trade 6, I just got out right here. And if we read the notes, it said I was slightly hesitant right here. And I say that was just because of the fair value gap. This is the first time I ever used this in my trading career. So I was kind of hesitant. Like, I don't know if it'll do exactly what I expected to because it's the first time I'm ever using it. So, you know, I think that's normal for something that I just started using. So I'm not mad at that. But I would say in the future, if it makes sense, hold it to that level, even if it is the first time that you're using something. You know, always read the price action and believe in that. And, you know, I know it's only single digit points that I'm leaving on the table, but what I've learned in the past is that that makes a very big difference. So you might give up 5 or 6 points today today in total, I left 5 plus 6. So that's 11 points on the table that I left. Now you might say, yeah, okay, it's not that bad. It's a part of trading. But over time, those, 6 to 11, 6 to 10 points that you leave on the table every other day or maybe every day, those will add up over time. So I just want to make sure I check that, correct that, and get that right going forward, and I should be good. So after that, I decided to call it a day. Now, that was the day that I had today, and I was able to make 670 in this evaluation account. But I want to talk about yesterday also, because I didn't do a trading review yesterday because I made some bad decisions and I was frustrated. But I still want to talk about it, because what I want to say is that I need to take this evaluation account a little bit more seriously, because yesterday I knew that I was trading an evaluation account. So I'm like, okay, it's not real. I can be a little bit more open with the trades that I take. But I don't think that's the mindset to have. I think yesterday I came in with the wrong mindset, but I kind of got that right last night. Did a lot of practicing, did a lot of thinking, and got my mind right, and was like, look, Ty, you got to treat the evaluation account the same way you would treat your live account. So it was a lot of trades that I made yesterday on the 25th that I would have never taken if I was trading with my real money. But I was like, hey, it's a demo account, so I might as well, right? So I need to make sure that I come in every day with the mindset that I had today, which is treat this account like it's your own. Because even though it's a demo evaluation account right now, if you keep doing your thing and you keep being consistent with your profits, this is going to turn into a real live funded account. So you got to treat it like that before you even get to that point. So that way, when you do get there, you don't have to adapt to anything new. It's already second nature. You already trade it like it's real money. So you don't have to make any adaptations. You just keep doing what you've already been doing. So I came in today and I just wanted to pretty much make back those profits that I lost yesterday. And I did a pretty good job of making back a good chunk of those. And that brought me back to pretty much the starting point that I started from on Friday. So I feel like I almost blew it, but I came back and the market gave me a opportunity to have a second chance. So now that I have a second chance, I'm not going to blow it. I'm going to come back tomorrow focused, locked in, and I'm going to make sure that I take all of the trades that I need to, only the trades that align with my trading plan, and anything else, I'm leaving it by the wayside. I will be patient, disciplined, and focused, and I'm going to make this happen. So I appreciate you guys for tuning in with me. I'll be back tomorrow, September 27th. But until then, you guys, study hard and take it easy.